Hi guys, welcome to this Moneycontrol live stream. You're watching Opening Bell with me, Nandita Khemka. Well, it promises to be another rainy day here in Mumbai. Of course, Mumbai is on red alert, so is Kerala, as rains continue to wreak havoc on regular life. But if you look at the Lal Street action, it has been raining gains there as well over the last two sessions. In fact, yesterday the Nifty ended above that 25,000 mark. But on that note, let me bring on board our technical guest for today. Joining me is Ajit Mishra, Senior VP Technical Research at Religare Broking. Ajit, lovely chatting with you. We have been witnessing great traction in the market, 25,000 back on the charts. But how does it look like as we step into monthly FNO expiry that's taking place on Thursday? Do you expect 25,200 to be hit before that, or do you think we could see some bit of consolidation kicking in?
Yeah, good morning, Nandita. So, Nandita, last week was the week of consolidation, but on Friday, in fact, on Thursday itself, we tested the critical support of 20 EMA, the short-term moving average, the first line of defense, and then we rebounded. And since then, we are seeing the recovery continuing, means we have reached to that mark, the previous swing high, close to around 25,100 again. As you rightly mentioned, that 25,200 rather is the critical hurdle to watch out for in the coming days. Until we break that mark, the sideways tone might continue with 24,800 being the immediate support. So as of now, since we are seeing buying interest emerging on every dip, that's the strategy that one should continue with. Means look for buying around 24,850, 900 zone when it comes to the index, and close to around 25,100, 200 area, you should look to book profits. Since it's a monthly expiry, expected volatility is likely to remain high, not only in the index, but on the stock specific front also. So the focus should be more on identifying the right set of stocks across sectors, banking, financials, energy, metal. They are the better bets, in comparison to the other sectors as of now.
Okay, but do you expect the Nifty Bank Index to retest life highs anytime soon? Do you see, the up move yesterday and last few days as a precursor to the index once again hitting those record levels?
Certainly. In fact, Nanda, I believe that in case if Nifty have to surpass this 25,200 levels, banking should play a critical role because almost after a 7,000 point kind of a rally, making a new record high, we are seeing almost a 1 month long consolidation, in the banking index while holding above its short-term averages. So it seems like that banking is taking a breather after the strong move, and in the next leg, once let's say we cross 56,000 mark, then probably we can see a fresh momentum which can help the index to inch toward 57,500 levels also. So yes, banking is something that you should keep on your radar, and within the banking also we are seeing across sectors, be the private PSUs offering buying opportunities. So even we might take a session or two to surpass the hurdle of 5600 mark, 56,000 mark. One should continue with buy on dips in the banking space as well.
Okay, buy on dips in the banking space. That should be the strategy. Just about 1.5 minutes to go for the markets to open. I want to talk about the stock of the day. Indigo. The block deal size has been increased according to CNBC TV 18. Rakesh Gangwal will now sell shares up to 11,300 crore rupees. Earlier, he was eyeing, raising somewhere around 6,800 crore rupees or thereabouts. So now it has been upsize 6,800 crore rupees, and from there 11,300 crore rupees. So block deal size upgraded. In fact, sources are suggesting that Gangwal will sell up to 3.4% equity, and the floor price was at 5,175 rupees per share. That's at a discount of 4.5% to the CMP. We also have a couple of queries on our feed on what one should be doing with Indigo now. The stock has been flat over the last 1 month and down 2% or so in the last 5 sessions. Hasn't really taken off. How do you see the shares of Indigo shaping up going forward?
Right, so Nanda, if you see, it's been almost a month now that the stock has been hovering in a very tight range around its record highs, but the tone looks positive. And after this block deal, I believe that there's a gap on the daily chart, around 5100 levels, which might get filled. So as if you're looking for a buying opportunity around that area, closer to around 5100 mark, definitely it's a buying opportunity considering the overall trend is positive. So if this gap, get filled, so then we'll have a next leg of the up move probably. With the stop at 4900, one can continue to look for buying opportunity around that mentioned area.
Okay, that's the view on Indigo, but let's take stock of how the markets have opened up. As was being envisaged or as was being hinted at by the Gift Nifty, we are looking at a negative open. In fact, we have seen a 90-point cut on the Nifty at the start. We are around the 24,900 mark. Sensex down 340 to 50 points or so. The mid cap index, now the fall here is a lot more measured. It's flat. In fact, it's trying to break into the positive territory as we speak. Bank Nifty as well on the back foot. 0.3% kind of a cut here. The advance decline ratio, although, is looking positive at the current juncture. It is tilted in favor of gainers. 2:1, that's the advanced decline ratio. That's how it's looking like. But let's take a look at the sectors. Yesterday, it was the auto pack, the metal pack, the IT pack. These were some of the sectors that led from the front. But today, just taking a look at which sector is really taking the lead. Flattish, most of the sectors are, looking flat at the current juncture, but what's holding out is FMCG, pharma, metals, PSU banks. These are some of the pockets that are holding out, but autos are trading in the red as we speak. Even IT is seeing some bit of profit taking down 0.4% or thereabouts. In terms of Indigo, last time I checked, I think just about a second ago, in fact, it was down 2.5% or so. So shares are under pressure. The block deal is likely to take place. Aside of that, if you look at some of the other movers, the frontline movers, NTPC is the top laggard as we speak. Eternal extending its losses. There's some bit of outflows that will happen on the back of weight reduction on FTSE and MSCI. Today, I think the weight reduction took place on FTSE. So the stock is down 1.5%. Bajaj Finserv, M&M, that was among the top gainers yesterday, under pressure. HCL Tech, Grasim, Infosys, Tata Consumer, Tech Mahindra, TCS, these are some of the other laggards. Gainers list is pretty slim this morning. We are seeing BEL, Bharat Electronics, emerge as the top Nifty gainer, 1% gain here. IndusInd Bank is witnessing some bit of buying, 0.6% kind of gain here. Hindalco, Dr. Reddy's, Geo Financial and Bajaj Auto, these are just about a handful of gainers this morning. By the way, as we speak, the Nifty has broken below the 24,900 mark. It's down over 110 points or so. Before we take stock of other stocks, Ajit, on a day when the markets have taken a breather, what stocks are you recommending for viewers for either the day or the rest of the week?
Right. So, Nanta, we discussing about the banking space. So within the banking, if you see SBI, it was sitting on the sidelines for almost a month now, and it's a very tight range consolidation that we are seeing in the stock. The other PSUs, they have done their part, means we have seen decent traction, Canara Bank, Maharashtra Bank and all the others. So we believe that, the risk reward is favorable when it comes to the SBI, because in case, let's say if the consolidation extends for a day or two, still we have a very strong base at 780 mark. So until we break that mark, one should continue to look for buying opportunity and accumulation in SBI. In the next leg, close around 820, 825 is something that the stock might test. Another stock that we like is Hudco. So Hudco, in certain PSUs, apart from defense, also we are seeing traction. So here also, after almost a month-long consolidation above the short-term averages, we have seen a base formation. And here we are eyeing the next leg could help the stock to inch towards 260, 265 area. So with stop at 225, Hudco can also be considered for fresh longs.
Okay, Hudco, SBI, these are some of the stocks mentioned by Ajit. But Ajit, there's the other stock that would be in focus because of a block deal would be PG Electroplast. Now, sources suggest that promoters are looking to sell up to 5.6% stake via a block deal. They are raising somewhere around 1170 crore rupees via stake sale. The floor price was at, has been set at 740 rupees per share. And of course, the block deal will trigger lock-in of remaining stake for 180 days or thereabouts. The stock is down 1% or so. How are you viewing the charts of PG Electroplast? The stock is down 12% in the last 1 month, and even a 3-month return, is negative, down 12% or so, and on a YTD basis, the stock is down 25%. Do you expect the stock to hit the bottom anytime soon, or do you expect more downside from here?
So Nanta, the stock topped out at the beginning of the year itself, means it made a high after a phenomenal surge from roughly around 100 to 1000 plus area, and it's now trading closer to its major averages. 730 is something that you should maintain a close eye on. Until we break this mark, there will be a possibility that this consolidation might continue with 810, 815 as the upper band. In case, let's say, if we fail to hold this long-term average, then probably we can see the next leg of the profit taking, which can push the stock towards 650 area. So as of now, one should avoid any fresh position. In case if you have any existing trades, 730 should be a 6 stop loss. In case of rebound, once we cross, let's say, 825, then definitely one can look for fresh buying interest also.
Okay, that's the view on a PG Electroplast. But I want to talk about some of these stocks that turned out to be volume shockers, so to say, yesterday. Balkrishna Industries, a case in point. Yesterday it was down 6.5%. Obviously, it is making some new forays which didn't really go down well with the street. But given the kind of move it saw yesterday, what would your call be on a Balkrishna Industries?
So Lenta is almost a no return period. If you see that in past, yes, there was a phase where the stock is from 22 and 3200, but from 2021 to till date, in case somebody is holding the position, is negligible return is something that they are driving as of now. So in my opinion, one should stay on the sidelines and let the stock stabilize above 2600, 2650 area. Then only you should look for fresh long positions. Means after this gap down also, we are seeing possibility of further consolidation with major support at 2300 mark. So roughly around 300 point kind of a range is something the stock might hover in. So as of now, it's an avoid. In case if you have any existing position, 2300 should be a stop loss, and close to around 2650, you should look to liquidate your position.
Okay, that's the view on Balkrishna Industries. But let's take a look at some of the queries then that are trickling in this morning and get some of them addressed. Indigo we've already addressed. There's a query coming in from Pankaj Kajalia on an Eicher Motors. Other two-wheeler stocks like Bajaj Auto, Hero Moto, they were upbeat yesterday, of course, the early monsoon arrival being a trigger. But within the premium space, Eicher Motors, I just want to see the chart of an Eicher Motors as to what it's doing right now. It's trading with a cut of 0.3% or so. The stock has been extremely flat over the last 5 sessions. At 5,400, would you take a bet here? It's still got a lot of distance to cover, so to say, if you look at the 52-week high of 5,900 or so.
Yeah, that's true. And in fact, if you see that the pace of advance has, reduced substantially in the recent times, means it made a new record high around 900 mark. And since then, we are seeing a gradual drift. The good part is that it's still holding its major averages. The volumes are very thin. So this indicates weaker hands exiting the stock in absence of any major momentum. So in case if your view is, let's say, 1 to 2 months, definitely you can consider to hold, or you can buy fresh also. 5,200 we believe is a very strong base, which is 200 points away from the current area. And for fresh momentum, those who are looking for a very short-term trend, then you should wait for a close above 5,550. Then we might see a fresh momentum, which could help the stock to inch towards previous record highs.
Okay, that's the view on Eicher. Hope that answers your query. A couple of queries on the real estate space. Hemant Singh wants to know your thoughts on how DLF is stacked up, and Komal Makecha wants to know which is the best stock in the real estate sector for the long term. DLF, in the last 1 month has rallied 17% or so. Prudent. I mean, would you really look at a DLF within the real estate space, or would you look at other names like Prestige Estates? How would you play this? And particularly for DLF, has seen a breakout, so to say, in the last 1 month. Is it expected to continue here on?
So yes, Nanda, it's been a period of decisive correction, and then this recent rebound with very strong volumes post numbers. So this is definitely encouraging, but at the same time, we are seeing that the previous distribution range is something that we are approaching towards. Means 800, 810 is a very strong hurdle for this stock. So here the risk to reward is 1:1. Means we have a support at 740. Those who are holding long position, I would recommend at least to book partial profit in case if you bought it at lower levels, and wait for the stock to stabilize above 800 for fresh buying. Within this space, I believe that Lodha is holding very strongly amid all this volatility. It continued to hold above its major averages on the multiple time frames, and in fact, it's gradually inching higher towards record high area. So that clearly shows outperformance, and probably let's say once we cross 1575 area, then 1800 plus is something that the stock might attempt. So let's say if your view is long term, Lodha is a better bet.
If you're looking for a long-term bet within the real estate space, it's Macrotech or Lodha. Before I take up other queries, I want to get in your thoughts on a Nazara Tech. The stock has seen very good up move over the last 1 month or so. Today, of course, it has taken a bit of a breather. Numbers came out. I think some brokerages have pointed out that the numbers were below expectations. Profit came in at 4 crores vis-a-vis 0.2 crores. Revenues were up 95% on a YY basis. Margins also at 6.5% vis-a-vis 1.3% on a year-on-year basis. And just reading the report from CLSA, they have an underperformed call with a target price of 705. The stock is at somewhere around 1260 or so. The target price is pretty much lower, and they've cut their FY26 to FY27 revenue and PAT estimates by 2 to 9%. Today a day of breather, but last 1 month has been phenomenal, 26% gains. Would you utilize dips to get into the counter, or would you advise booking partial profits in this counter?
Nandita, the way the stock has advanced from roughly around 900 to 1300 levels, it was almost a vertical rise with hardly any pause in between, and now we are seeing a bit of a consolidation. So the prudent approach is to at least book partial profit and let the stock revert to its mean, the short-term average, which plays around 1190 area for any fresh buying. So as of now, yes, booking profit seems a more prudent approach, and for fresh buying around 1190 or a breakout above 1320, not before that.
Okay, that's the view on Nazara. But one stock that I want to take stock of is BEML. The stock is up, I think, 16, 17 odd percent. If you see the last 2-day moves right now, up 3%. Yesterday it was up some 12-13%. We have a query coming in from Pravina. Wants to know it's a hold or sell. So after this move, should one hang on, or should one look at booking profits?
So yes, you should definitely hang on, because after almost 6 months of consolidation or correction, the stock has reclaimed its previous swing high. So probably it should extend this recovery and gradually inch towards its record highs, which is around 5,000 mark. So as of now 4200, the previous swing high should be your immediate support and your stop loss. And the first hurdle could be close to around 4650, 4700 mark, and then 5000 levels.
That's the view. Hang on, Pravina. But just want to quickly look at the market once. The sell-off has kind of intensified a bit. We've fallen below that 24,800 mark. So, some bit of consolidation, profit kicking in after a good up move over the last 2 sessions. The mid-cap index, however, is, kind of managing to hold out a bit. It's kind of trading flat with a negative bias. But let's shift focus to the next query then. This one's coming in from Siddharth on Afcon's Infra. The stock, in the last 5 sessions hasn't seen a very good run. It's at 438 or so. If somebody has to look at this particular stock within the infra basket, would you advise, or would you look at better stocks in the pocket?
Afcon, like after the initial listing, we have very limited data to, by the way, comment upon, because the trend it's showing is mixed as of now. Means 495, 400 is something that broadly has been hovering in this broader range, and currently we are in the middle of the band while holding above its major averages. So it's not a good sign. Means in case if it witnesses any recovery also, there will be multiple hurdles to cross. So close to around 445 first, then 458, and then 465. So on every 5 to 10 points upside, we have some resistance or the other. So as of now, definitely you should avoid. Within the infra space, I would rather prefer NCC. NCC, if you see that post numbers, we are seeing very gradual and disciplined, recovery. And once, let's say, we cross 240 mark, then there could be a fresh momentum also in the stock. So as of now, NCC could be the bet, but wait on the sidelines until we break 240 mark decisively.
Okay, that's the view then. NCC looking better on the charts, and any recovery that we see in AFCONs could be short lived. I have spotted a query on Bajaj Healthcare on our feed. This one's coming in from Nitin Shaji. The stock is reacting to its numbers. It's down 7% or so. Taking stock of the numbers, the company did swing to profit in the fourth quarter. It reported a profit of 11.2 crores vis-a-vis a loss of 30 crores in the same period last year, but margins have come in at 7.6% versus almost 12%. So perhaps that's turning out to be a dampener, and the stock is down 7%. What would you do with the Bajaj Healthcare now, Ajit? Down 7%?
Yes, so Nanta, if you see that it was a broader consolidation which ended, in the month of December after the breakout of a 475 mark, and the stock inched towards 725 plus area. And after recent consolidations, gradually witnessing some profit taking. Good part is that it's still holding up with its major averages around 520. We have the long term averages placed, so the downside seems capped. This is the good point, but at the same time, since the volumes are low, comparatively low, so it might continue to consolidate in this band. So close to around 520 to 640 is something that the stock might continue to hover in. So if you have any existing position, you may stay put and use any recovery towards 640 to reduce your position.
Okay, that's the view on Bajaj Healthcare. Hope that answers your query. I have a query coming in from Varsha Gajjar. She wants to know your thoughts on BSC post the bonus issue and the adjustments, because she was of course making profits on her holdings. She's a bit confused as to how the adjustments have taken place, because now for her it is showing in the red. So I mean, how should one navigate if they've been holding the stock pre-bonus issue? How should one really look at it now?
I guess there could be some problem with the reading, because the stock is still trading closer to its record high. So it's 2:1 the bonus ratio, and still the stock is trading closer to its record high zone. So 2300 is something that should maintain as a stop loss in case if the view is very short term. And in the next leg, let's say if it manages to cross 2520, then probably we can see fresh leg of momentum also. So as of now, the trend is still positive. You can stay put with 2300 as a stop loss.
Okay, that's the view, Varsha. I hope that clarifies your confusion. And hang on, that's the call from Ajit. One query coming in from Anunay. He wants to know your thoughts on Lloyd Metals. He's bought shares at 1327. The stock is trading at 1358. Mild profits here. What's the strategy he should adopt? The stock is done well. If you look at the last month or so, 10% gain, and last 6 months it has rallied in excess of 40%.
That's true, and in fact, it's gradually inching towards its record highs. That's a good sign. Means we are seeing decent volumes on up days. So we have base formation also after this recent up move. So close to around 1290.95 is something that we have the immediate base. So with that as a stop loss, you can continue to hold 1450, the previous record high. That should be his target zone. So the risk reward is favorable. You can continue to stay put.
Okay, that's the view on Lloyd Metals. I hope that answers your query. We have time for just about one or two more queries then. Let's take up one on e-clerks then. This gentleman has bought e-clerks at 2,431. Wants to know whether he should trail or book profits. Your thoughts here, Ajit, e-clerks?
You should certainly book profits, because from 2300, 3400 in no time. So there'll be probably consolidation or maybe some profit taking also in case if it breaks 3300 mark. So at least book partial profit around current area, and for the remaining position, 3290 should be a strict stop loss. Because in case if it breaks, then probably we can see further decline towards 3150 mark. In the next leg, let's say it manages to hold 3300 mark, then probably it can gradually inch toward 3600, 3650 also. So around that area, he should book complete.
Okay, that's the view on e-clerks. Couple of more queries then. I spotted one on NMDC that has just come in from Ratna Kumar Solomon. For the long term, what should he do with NMDC? He is making some bit of a profit at the current juncture, but it's very mild. Should he hold on? Because stock has seen good traction. The 52-week high is 92 or so, and the stock is 20 rupees away from that level. Do you see that level being, attempted, or the stock attempting to reclaim those levels? Is this or the stock, is it just in the middle of an up move, or do you think the up move it has seen over the last month or so has kind of run its course?
So in fact, Ananta, I believe that the stock has witnessed a fresh reversal. Means almost after witnessing a year-long corrective phase, we are seeing that stock has surpassed its declining trend line. Reclaims major averages, and if I'm not wrong, today the results are also scheduled. So probably we might get hint, from that front also. But broadly, I believe that the trend is positive, has turned positive, and 66.65 is a very strong base now. So with that as a stop loss, you can definitely wait for the long term also. In the first leg, close to around 78, and then around the 86, 88 means the record high zone is something that stock might attempt.
Okay, that's the view on NMDC. Results will be coming out, so perhaps that could be another trigger for the stock as well. But with that, we've come to the end of the query segment, and Ajit would like to thank you for taking out time and joining in this morning and sharing your thoughts. Look forward to our next interaction as well. Hope you have a great day.
Thank you, Nanta. Same to you.
Thank you. Well, on that note, taking a look at the market, we're down 180 points above that 24,800 mark as of now. We did test that level a little. In fact, the losses are being led by the likes of Grasim, Ultratech Cement, Eternal, NTPC, Axis Bank and M&M. So yes, leave you there with a 200-point cut on the Nifty. Hopefully, it would get better as the day progresses. I'll see you on closing bell at 3:30 p.m. to take stock of how the market ends for the day, and with, of course, our stock list for the day as well. Till then, have a good one. I'll see you at 3:30 p.m. Thanks a lot for watching from the entire team. Have a good day.